Hey, you guys, it's Double Moms here, and we're going to talk about the Fed meeting that's coming up tomorrow, March 19th, 2025, and what this may mean for the effects across the markets. But before we begin, if you want access to our private Discord so you can get all our real time alerts and our custom scanners, the link is in the description. We alerted 4 100% plus runners and 4 other large runners for our private Discord members today, March 18th, 2025. Get our real time stock alerts and our custom scanners for the first 4 days at only $1.99. We are just made different, and the early bird gets the cash. Now, for the past 2 days, there have been reports of U.S. stocks being on a rebound after a rough period of selling, with investors cutting back on their exposure to U.S. risk assets. The driving force? Major tech giants like Nvidia, which saw a 3.4% drop in its stock price, even though the company announced big plans to solidify its dominance in the fast-growing AI market. NVIDIA's drop is particularly notable given its ambitious vision for the future of artificial intelligence, as they announced plans to expand with robots and desktop systems. Yet, despite these promising ventures, the market didn't seem too convinced. Why? Maybe because the economy may be showing signs of strain. The latest data showing high import prices adding more pressure to an already fragile market sentiment. In response, investors turned to safer assets. The Treasury saw an uptick following a strong sale of $13 billion in 20-year bonds, and gold also surged to new highs as well. It's clear that market confidence is beginning to wane. The numbers tell the story. The S&P 500 dropped by 1.1%. The tech-heavy NASDAQ 100 saw an even steeper fall, down 1.7%, while the Dow Jones Industrial Average declined 0.6%. Investors are clearly skittish about the direction of the economy, especially with key decisions looming on the horizon, which brings us to the Federal Reserve's upcoming meeting. This decision is set to have a ripple effect across markets as analysts closely monitor how President Trump's trade policies might be influencing the economy. If the economy slows down or AI investments don't pan out as expected, we could see further volatility. According to Bank of America's most recent survey, investors are more cautious than ever. In fact, they've slashed their holdings of U.S. equities to the lowest level on record while piling into cash. This marks a stark contrast to just a month ago when markets were riding high on expectations that President Trump's policies would spur growth. But with fears of a slowing economy and concerns over the effectiveness of major AI investments, those assumptions are now being called into question. If the economy hits a rough patch, large-scale investments in AI and technology might not be enough to turn things around. Right now, many investors are choosing caution over risk. With the markets in a delicate balance, all eyes are on the Fed and what they'll say next to guide us through an uncertain economic landscape. With the S&P 500 and major tech stocks like Nvidia taking hits, it's clear that we're entering a new chapter in the market story, one where dynamics of trade, inflation, and technological investments are all in the spotlight. We'll be keeping an eye on developments when the Fed meets tomorrow to see what the effects are on investments in AI and the overall movements of the economy. Please note, folks, we are not financial or stock advisors, and this is not professional advice. This episode is for entertainment purposes only. Always do your own due diligence. This is Double Moms. I'll see all of you again on the flip side.